Hello, very good morning. Welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning to all. Today will be Wednesday, the 21st of May, 2025. So as usual, before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer slide first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as their respective impact on the various key cross asset classes movement on an intraday basis. So yesterday's movement will be more primary on the FX market. Why? Because we start to see a kind of a very significant US dollar strength coming back into the picture. So what do I mean by this? So let me open my screen. Right, so this is the 5-day rolling performance of the US dollar against other major currency. That means the dollar being the base currency, then plotted against the Aussie, the CAD, the Sing, the Sterling, the Euro, the Yen, and as well as the Swiss franc. So still recall that yesterday I went off for a break because due to a particular caregiver duty situation. So prior to that, in fact, late last week, we do have a bearish bias on the US dollar coming back into the picture, and the market continues to actually play out as expected. That means, i.e., dollar weakness against a broad base of the major trading currency. So the dollar weakness continue. Very obvious that was the key theme that has taken shape yesterday. So what you could see is that the dollar is the worst performing against the safe haven, which is the yen, and as well as the Swiss franc over here. So based on the 5-day rolling performance basis, the dollar is down by negative 1.86% against the yen, and the dollar is down by negative 2.14% against the Swiss franc. And not falling behind, the dollar is also weakening against the sterling and the euro by around negative 1.2%. And even the Aussie, yesterday the Aussie RBA has a much more of a dovish stance in terms of the its guardian. So later I'll share on the news flow. The Aussie dollar didn't actually slide much against the USD there after that dollar push up. Right after RBA decision, the dollar strength can maintain, and right now, based on the 5-day rolling performance basis, the dollar starts to weaken against the Aussie by negative 0.25%. That means, i.e., the Aussie dollar rate managed to survive at the 64 short-term pivotal support level that I highlighted on Monday. All right, so now let us now take a look at the news flow. That is why is driving this dollar weakness, this ongoing dollar weakness. It's more on a relative basis. Why? Because the Japanese super long bond yield saw to records over here because of a weak auction in the 20-year and the 30-year bond over here. All right, the 20-year and the 30-year Japanese bond. So what do I mean by this? So if you look at from a relative okay, let's look at from an absolute perspective first. All right, so if you look at from an absolute perspective over here, this is the Japanese bond, right? So the long end of the curve spike up very strongly yesterday. Okay, look at the 1 month. All right, so this is the highest level on record. I mean, based on TradingView, both TradingView data is only up to what 2007, and if you look at some media reports stating that at 3.16% for the 30-year Japanese bond, that is actually the highest level since 1999 over here. So if you put it because of the 30 years is the longest tenure, that also created a positive feedback loop into other higher tenure in the JGB bond yield. So you look at the 10-year JGB bond yield, it also spike up as well to 1.52%, and now it's almost to run to test that March 2025 high that was seen 2 months ago or 3 months ago at 1.59%. So what we could see over here is that if we were to actually plot the JGB yield differential against the US Treasury yield differential, you're able to see that the US Treasury yield premium is getting lesser and lesser against the JGB yield, and that actually created downside pressure on the dollar yen. So if you look at this from a relative perspective over here, so this is what I mean, right? So if we put on this, the top two of my of the chart, you could see at the top panel, the top two panel is the spread between the 10-year US Treasury yield minus the is actually the spread is equals to the 10-year US Treasury yield minus the 10-year JGB yield. So we know that yesterday the 30-year JGB yield spike up, and that create a positive feedback loop on across the board in all the JGB yields. That means all the JGB yields meant see upside pressure, and that created the yield premium of the 10-year Treasury yield against the JGB shrunk. Okay, it's shrink further. So since hitting 3.6 is the medium term pivotal resistance, it continues to decline. So yesterday, right now, it's trading at 2.96. All right. So comparatively, since the start of this year, the yield premium of the US Treasury over JGB has started to shrink. It did expand on the upside. Very similar if you look at the lower tenure, which is the 2-year Treasuries yield spread minus of the 2-year JGB yield. So it is considered as a yield spread. That means the yield spread between the 2-year Treasury and the 2-year JGB also continues to shrink since the start of this year, and right now is at 3.25%. And if you look at if this US Treasury yield premium continues to shrink versus the JGB, it actually asserts downside pressure on the dollar yen. So that actually explains why dollar yen is facing a significant weakness right now. As you could see right now over here, is due to the negative feedback loop that is being created by, number one, the JGB yield is now increasing at a faster pace compared to the respective tenure in the US Treasury market. That means the US Treasury market premium over the Japanese government bond is shrinking. All right, so that created that downside negative loop on the dollar yen, and that also created a so-called have a negative spillover on the US dollar in the FX market. So that also explains why the pronounced dollar weakness that is being seen yesterday. All right, and also there are other news flow that is supporting this dollar weakness is coming up from UK. So UK yesterday, the leadership, the Prime Minister, and with EU trade officials reached a deal to reset UK and Europe relationships. Still recall that not too long ago in 2016, there's this Brexit over here. So with Brexit, the trade relationship between UK and EU soured, and because of this, ongoing US trade tension with the rest of the world, that led to countries that previously in not so nice relationship or rosy relationship now starts to build better relationship to act as a counter against US trade tariffs. All right, so UK and EU has come together, and they reach a deal to actually start to reset relationship between themselves. All right, so they just sealed a deal with the European Union that lays the ground for closer collaboration with the bloc, seeing the removal of majority of border checks on food and agriculture products. So that's the first step. And also they also pledged to discuss British access to Europe 150 billion defense funds. Okay, so that seems to be a positive feedback loop for the UK economy, given the fact that number one, UK is able to access Europe 150 billion defense funds. So that is being what is called led by the Germany new leadership, because Germany itself now has decided to go away from the past by implementing more of a higher fiscal expansionary plan, especially focusing on defense. So that actually created a positive feedback loop on the sterling dollar, and causes the sterling to actually rose very sharply against the US. That means the US also depreciate very significantly against the sterling, which is down by negative 1.2%. So that also actually came in line with our expectation of our intraday trend bullish bias on the sterling against the dollar that we have since last week. Right, later I'll touch on the technical chart on the sterling dollar to uncover what are the key levels to watch for today. And also on the Australia side of the story, so for Aussie yesterday, the RBA has a much more surprising take against the market, because they recall that every time RBA do any press conference, they tend to err on the cautious side of the story, stating that they tends to be much more data dependent. But however, Australia yesterday develops a dovish rate cut. Why? Because they actually reduced the number one growth forecast in 2025 in Australia, and also during the press conference in the 1 hour later after the release of this 25 basis point cut, which is widely already being priced in by market participants. They say that yesterday among RBA officials, the discussion was about 50 and 25 basis point cut. That means there is some in the minds of RBA officials. That means implying that the Aussie economy has really weakened become much more than expected, and they contemplate a 50 basis point cut yesterday. So this seems to be much more of a dovish stance right now by RBA, even though during the press conference, the RBA block stating that they are more data dependent, but it seems to me that action speaks louder than word. And with some officials yesterday aiming for a 50 basis point cut, which is way beyond market expectation, that actually drove down the Aussie dollar by 0.6% yesterday. All right, it being the weakest major currency against the dollar. But because of the dollar weakness that is being seen elsewhere, that created a floor on the Aussie dollar that managed to find support at 0.64 figure level that we highlighted earlier. So I do expect the Aussie dollar will continue to trade in a very choppy sideways range going forward. Number one, we have Aussie dollar weakness that is being reinforced by yesterday's RBA much more dovish stance, where RBA officials in their mindset has started to discuss about a 50 basis point cut at one point at one go. But however, the Aussie weakness is being supported by general US dollar weakness. That means the fall in the Aussie has been managed to cap at some support level, because the weakness of the dollar in other major currency, like against the yen and against the euro and against the sterling, that kept Aussie weakness to a floor at the 64 figure level. All right, so later I'll touch on the intraday technical outlook on Aussie dollar. Now, next up will be the performance of the US stock market. So the US stock market was rather muted yesterday, so it's more like a profit taking kind of situation, where the SPX is down by negative 0.4%. The Nasdaq is down by negative 0.4% as well, almost the same magnitude. The Dow Jones Industrial Average not much change as well, down negative 0.27%, whilst the Russell 2000 almost unchanged yesterday. So it's more of a profit taking scenario yesterday on the major US stock indices. All right. So and today oil price managed to gain by 1%. Oil price over here. So if you look at oil price, WTI crude oil price, so now it's actually gaining up by 1% point, 1.25%, and broke above the 20-day moving average, and as well as the 62.80 short-term pivotal resistance that we have before I go for a short or break yesterday. So now it's trading at 63.50, and one of the reasons why oil price today suddenly shoot up by 1.25% is by this news flow stating that Israel right now is looking to strike Iran over here. So despite the fact that the last few days oil price came down because of this potential US and Iran deal, where US President Trump stated that Iran is looking to dismantle its or stop its nuclear program, and when that happens, the sanction will be lifted by US, and Iran oil supply is able to flood in the oil market. So that created a negative feedback loop in the price action on West Texas crude oil, given the fact that OPEC Plus members are still on the path of production increase rather than production halt. And because of this news flow stating that Israel is looking to strike Iran, that created a positive feedback loop back into the oil market, stating that perhaps the last few weeks of US positive US Iran talks that may lead to more positive outcome, that in the end removal of sanction of Iran oil, that has been kind of derailed by this potentially Israel that is preparing to strike Iran. So that could increase the geopolitical risk premium again in the oil market, that created the uptick in oil price over here. All right. And because of this oil price looking to strike on Israel itself, Israel looking to strike Iran, creating this geopolitical risk premium, that actually see an increase in gold. So gold is all being a safe haven currency. And don't forget, gold from a technical standpoint, we have started to flip into a bullish bias because of positive element that's being seen after last week decline testing. It managed to find support at the 50-day moving average, which is 3130. So let me open up the chart for you guys to have a better view of the gold price. So gold price actually added 1% yesterday and continues to see much gain in today's Asia session as well. Okay, let me open up the chart of gold. Oh gosh, it's a bit slow. Okay, so if you look at gold price, so I do highlight that there's positive element on the 50-day moving average. Okay, so right now you see this kind of V-shaped recovery, clearing above the 20, now looking to clear above the 20-day moving average, which is at 3,305. So yesterday gold price added by 1.8%, also reinforced by that number one, the dollar weakness as well, because gold and dollar move inversely. And also today gold price added on by 0.4% is due to the geopolitical risk premium uptick, driven by the fact that Israel reports saying that Israel is looking to strike Iran over here. All right, so that also saw gold price remains firm in today's Asia session. All right, so that sum up today's we call it first segment of today's daily dose. So let us now jump straight into the second segment of today's daily dose, which is the intraday technical outlook on those broad-based cross asset classes that we cover on a daily basis. So before that, let me expand my screen so that you guys could have a better view of the charts. All right, so let us start with the FX market first. So over the FX market, okay, let me open the screen of the FX market. All right, so over at the FX market, we do know that the dollar weakness, pardon me, starts to actually come back into the market. And previously, we were neutral between the euro dollar, because the euro dollar continued to trade sideways below the 20-day moving average, but holding above the 50-day moving average. And yesterday, it very clearly broke above the in today's Asia session, very clearly it broke above the upper neutrality zone, which is at the 112.80 level. Now turns into a first support level to watch in today's European session, and also clearing above the 20-day moving average as well. So indicating that potentially now we may start to see higher odds of the start of a bullish impulsive up move sequence, where previously the decline from 21st of April all the way up to the test, down to the retest on the 50-day moving average at around the 111 figure level, which is 13 May. This corrective decline over here may have ended, and right now the impulsive up move sequence may have resumed for the euro dollar. And with the bullish breakout of the upper neutrality range limit, which is at the 112.80 level, we will flip back to an intraday trend bullish bias on the euro dollar, using the 112.15 level as my short-term pivotal support level for today. So that is actually the low of yesterday's Asia session, and also the pullback line of this dotted gray line over here. Let me put it in. Okay, which is the former minor descending trend line from 21st of April minor swing high, now turns into a key short-term pullback support. So as long as 112.15 short-term pivotal support holds, we will flip to a intraday trend bullish bias on the euro dollar for today, next near-term resistance zone to watch out for will be at the 113.70, 114.25 for today. Right. However, if price action starts to come down and reverse downwards and have a bearish breakdown for hourly close below 112.15, that would actually indicate that today's push up or bullish breakout is a fake. That means a failure bullish breakout, and price action will thunder downwards again to see it trading in a choppy sideways movement. First step, to retest the 50-day moving average at 111.35. Only a breakdown below 111.35 may see another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 110.50. Right, so that's for you.
1, 2, 3.
Testing, 1, 2, 3. I think it should be working now. Test. Testing, 1, 2, 3. Test. Okay, let me check again now. Sorry about that. Mic test. Test. Should be, I think should be working. Yeah, strange. I know why suddenly that voice got tripped off. All right, so let me now recap on the Aussie dollar. So the Aussie dollar is at a very tight sideways range. Number one being so-called compressed by two opposite factors, dovish RBA, and also general dollar weakness that's seen in the major currency. So I'll be watching 64 figure short-term pivotal support remains unchanged, still keeping my short-term intraday bullish bias within this tight sideways range configuration. A breakout above 64.60, which is the 20-day moving average that got rejected yesterday, may see the next near-term resistance coming in at 65.15 in first step. Only above 65.15 may see 65.20/65.55 coming in next, which was the previous mid-November last year minus swing high area over here. Okay, which I shared with you all earlier. Yeah, this area here, 20th of November and 22nd of November. Then, however, if price action starts to have a bearish breakdown with an hourly close below 64 figure level, then today's intraday trend bullish bias will be invalidated to see a downward drift towards the lower limit of this sideways range configuration that is in place since 16th of April, which is acting as a next near-term support zone at 63.60/63.30, which is also confluence with the 50-day moving average. All right, next up will be the dollar yen. So dollar yen, like I explained earlier, now continues to plunge downwards and now broken below the 144.10 level. So this 144.10 level is very important. Why? Because if you go to the daily time frame chart, so this daily time frame chart, the 144.10 level is in fact the ascending trend line that is in place previously from 22nd of April 2025. So thereafter, price action stage a corrective rebound. Then after this corrective bounce, can't break above the 200-day moving average, which is the 149 medium-term pivotal resistance level, and starts to drift downwards. And price action since 15th of May has reintegrated back below this medium-term descending trend line that kept previous rally since the high of 10th of January. So what I could see over here is that means the 12th of May push up that's been driven by that so-called 90-day pause on lower trade tariffs between US and China after that successful diplomatic meeting in the weekend of 11th of May in Switzerland between US and China trade officials. Price action on the dollar yen starts to flip downwards. That means indicate that this is a failure bullish breakout or head fake, and we may start to resume its downside impulsive downward sequence and may even broke the 140 figure level because of the impulsive downward has resumed and higher odds to see lower low instead. So if today if we have an hourly close below 144.10, which is so the below the 20-day moving average, not hourly, daily close below 144.10, and which very clearly broken down this ascending trend line from the low of 24th of April and the 20-day moving average, that would increase the odds that the dollar yen now may starts to kickstart a multi-week medium term impulsive down move sequence. All right, so that 144.10 is very important. Right, so now on an intraday basis, we'll still maintain the intraday trend bearish bias, given that now the 144.10 is being almost taken out over here. So the next near-term support level to watch will be 142.90/142.35, which is the congestion area of minus swing low area of 7th of May, 8th of May, and as well as 6th of May. Right, so this is the next near-term support level to watch on the intraday basis over here. All right, so let me do some adjustment. All right, so my short-term pivotal support level, I will highlight it very close to the 20-day moving average, which is slightly above the 144, which is the slightly above the 20-day moving average, which is at the 144.60 level, taking into account of yesterday's US session opening high, which is the 144.95 over here. So 144.95. So this will be my Titan short-term pivotal resistance level on the dollar yen. Okay, let me adjust this to just a normal resistance. Okay, let me do a bit of adjustment. Okay, since this has already been taken out. Okay, so as long as price action didn't surpass above this Titan short-term pivotal resistance level of 144.95 on the dollar yen, we'll still maintain a intraday trend bearish bias, looking for the dollar yen, the next near-term support level zone to come in at 142.90 slash 142.35 for today. However, if price action starts to see a bullish breakout with an hourly close above 144.95, then today's intraday trend bearish bias will be invalidated to see a squeeze up to revisit 14620, which is the 50-day moving average, acting as the similar resistance level as well. Only a breakout above 14620, then potentially we may start to see another round of corrective rebound sequence unfolding on the dollar yen, revisiting this 14775, 14870 next over here. All right, so just in case if the 142.35 level doesn't hold, given that the dollar yen is pretty much weak right now, driven by the fact of that shrinking US Treasury yield premium against the JGB yield, the next support level to watch after 142.35, 142.35 on an intraday basis will be this congestion area over here. Okay, former minor swing high turns to a pullback support at the 14105 level. Okay, then put it in writing. Okay, 141.05 level. Okay, and if you will do the Fibo extension, it should be the 4.236. Okay, 2-time Fibo extension. Okay, 2-time Fibo extension taken from the start of this ongoing impulsive downward sequence from the high of 13th of May. Right, so that's for the dollar yen. Okay, that sum up the intraday technical outlook on the FX market. So now let us proceed with the market, the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33, which represent the Hang Seng Index, continues to remain resilient over here. So we continues to see a series of higher high, higher low, and it so starts to break out above our first resistance level at 23,740. All right, so this level has been taken out as we are speaking right now, and now proceeding to the next resistance level at 23,970 slash 24,040, and above it may see the next resistance coming in at 24,350 level, which is the congestion area of 17th of May and 20th of 17th of March and 20th of March over here. So, and also the upper limit of this minor ascending channel drawn from the low of 16th of April and the 1.382 Fibo extension of this ongoing impulsive up move sequence from the low of 9th of April. So what I'm going to do now is that I will tighten the short-term pivotal resistance, short-term pivotal support level for a better risk management perspective, since price action has really risen by a fair bit as we last spoke. All right, so what I'm going to do over here is that my pivotal support for today, okay, will be at this former minor swing high of 16th of May and 19th of May. Clearly stage a breakout, retest it on yesterday's Asia session low, managed to survive and stage that higher high. Okay, and also now confluence with the lower limit of this minor ascending channel that I drew from the low of 16th of April. So this will be my new short-term Titan short-term pivotal support level. Okay, so this will, oops. Okay, so this will be just a normal support. For today. Okay, let me do the adjustment. Okay, so this will be 2360, 360, 370, pardon me. So 23,003 W. Okay, let me drag it up. So this I remove. Oops. Okay. So 23,370 will be my Titan short-term pivotal support level on the Hong Kong 33. Still maintain our intraday trend bullish bias on the Hong Kong 33, representing the Hang Seng Index. Next resistance level to watch after 24,040 will be 24,350. However, if price action starts to break down and the hourly close below 23,370, Titan short-term pivotal support for today, that will invalidate today's intraday trend bullish bias to see it sliding downwards. For the start of a minor corrective decline sequence, exposing the next near-term support level at 22,970, followed by 22,680, which confluence with the 50-day and the 20-day moving average. Right, so that's for the Hong Kong 33. Up next will be the Nikkei 225, representing the Japan 225. So the Japan 225 continues to trade in a rather lackluster fashion, still holding below the short-term pivotal resistance level of 37,925. So we'll still maintain our intraday trend bearish bias as long as 37,925 come break out on the upside. Near-term support level to watch 37,280. A breakdown below 37,280 exposes the next support level coming in from a intraday basis, which is at 630. All right, so below 37,280 exposes 36,630, which is the minor swing low area of 2nd of May to 8th of May. Only an hourly close above 37 and a breakout hourly close and a breakout above 37,925. That will invalidate today's intraday trend bearish bias to kickstart another round of impulsive upmove sequence, exposing the next near-term support level exposing the next near-term resistance level in first step at 38,460, followed by 38,850. All right, so that's for the Japan 225. Next, we'll proceed to the Germany 30, representing the German DAX. So the Germany 30 continues to inch higher and hit a brand new all-time high area at the 24,100 handle, which is very close to the 24,170, 24,190 short-term pivotal resistance zone that we predefined earlier according to Fibo extension clustering techniques. So with that, we will tighten our short-term pivotal support level for today, taking into account of the Monday's congestion area that managed to survive since last Friday as well at this 23,670, which are our first support coming in at 23,900, which correspond to this minor ascending channel taken from the low minor swing low of 11th of April. So as long as price action didn't dip below 23,670, Titan short-term pivotal support level for today, we'll still maintain that intraday trend bullish bias on the Germany 30. Next resistance level to watch in the near term after 24,190 will be 24,440 / 24,560. We also defined by Fibo extension clustering a zone. However, if only a price action breakdown and hourly close below 23,675, that would invalidate today's intraday trend bearish bias to kickstart another round of that would invalidate today's intraday trend bullish bias. Okay, I repeat, 23,675 will be my short-term pivotal support level to maintain our intraday trend bullish bias for today on the Germany 30. Next resistance level to watch after 24,190 will be 24,440 / 24,560. only an hourly close and a breakdown below 23,675 that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence unfolding, exposing the next near-term support level in first step at 23,380, followed by 23,070, which confluence with the rising 20-day moving average. Next up will be the major US stock indices, starting with the US Wall Street 30 over here. So no change on the US Wall Street 30 as price action continues to trade in a higher high and higher low fashion over here. So with that, I will actually tighten my short-term pivotal support level to take into account of Monday's minor swing low that kickstart the last rally before shaping that pullback yesterday, but managed to hold above the 200-day moving average. I think as a first support at 42,560. All right, so I will tighten my short-term pivotal support level to 42,440 today. Okay, let me put it in writing. 42,440. Okay, so this will be my next support level to watch. Okay, so for the US Wall Street 30, still maintain that intraday trend bullish bias on the US Wall Street 30, using a tightened short-term pivotal support level for today at 42,440, slightly below the 200-day moving average that's acting as a first support level at 42,000. Sorry, give me a minute. What is this? Okay, 1 second. Let me make sure that this level is correct. Okay, 42,190. Okay, let me do the adjustment again. 190. Okay, so I repeat, using a adjusted slightly higher short-term pivotal support level for today on the US Wall Street 30 at 42,190, slightly below the first support level, which is close to the 200-day moving average at 42,440. We'll still maintain our intraday trend bullish bias on the US Wall Street 30. First near-term resistance level to watch 43,085. Above 43,085 sees 43,720 next, which is the 1.382 Fibo extension taken from the low of 7th of April and as well as the congestion area of 28th of February. That gives us 43,720. Only a price action breakdown below the tightened short-term pivotal support level of 42,190 that would invalidate today's intraday trend bullish bias to see a slight to expose 41,770, followed by 41,350 / 41,135, which so confluence with the rising 20-day moving average. Right, so that's for the US Wall Street 30. Right, so right now let us proceed to the next major US stock indices, which is the Nasdaq 100. So the Nasdaq 100 continues to can't see a proper breakout above the 21,400 for the last two sessions, but still managed to hold above our first support level at the 21,180. So still no change, still using 20,900 as my short. Okay, maybe let me tighten my short-term pivotal support level. Okay, to the minor swing low of 19th of May, which is 21,040. Okay, so as long as this tightened short-term pivotal support holds at 21,040, we'll still maintain our intraday trend bullish bias on the Nasdaq 100 over here. So above 21,400, with a clear hourly close above it, may expose the next near-term resistance level coming in at 21,750. Only hourly close and a breakdown below 21,040, tighten short-term pivotal support level for today that will invalidate today's intraday trend bullish bias to kickstart another round of a minor corrective decline sequence unfolding, heading down towards 20,690. A breakdown below 20,690 sees the key medium-term support coming in at 20,390, which correspond to the lower limit of this minor ascending channel that I drew from 22nd of April low, and also confluence with the key 200-day moving average, and coming soon the 20-day moving average as well, coming soon at 20,390. All right, so watching 21,040, slightly adjusted short-term pivotal support on the Nasdaq 100 to maintain that intraday trend bullish bias. All right, so next up will be the commodities market, starting with gold XAU/USD. So for gold XAU/USD that I mentioned in today's start of today's daily dose, the bullish bias has been confirmed by two fundamental factors as well: weakening US dollar strength, weakening US dollar as per se, and the rising geopolitical risk premium due to the fact that of the Israel-Iran conflict. All right, so what you could see over here is very clearly is now broken above the 20-day moving average at the 3,300 level. All right, so this will be my first support level to watch, since very clearly has been taken out. So I would now have a slightly adjusted tighten short-term pivotal support level, okay, at 32.52. All right, so this will be my tighten short-term pivotal support level, 32.52. Okay, let me put it in writing again. All right, 32.52. Okay, so this will be my normal support level, 32.04. All right. Okay, so with a tightened short-term pivotal support level at 32.52, we'll still maintain our intraday trend bullish bias as gold XAU/USD starts to kickstart a fresh impulsive upmove sequence potentially. In first step, the next resistance level to watch will be 33.60, which is the 1.618 Fibo extension taken from the low of 15th of May and the minor congestion area of 7th of May and 8th of May. Above 33.60 may see a retest of the minor swing high of 7th of May and 8th of May, acting as the next intermediate resistance zone at 34.17/34.35. Only an hourly close and a breakdown below tightened short-term pivotal support at 32.52 will negate today's intraday trend bullish bias to see a choppy downward drift to retest the low of yesterday's Asia session low at 32.04, which is also coming close to the rising 50-day moving average as well. All right, so that's for gold XAU/USD, maintaining an intraday trend bullish bias, holding above a tightened short-term pivotal support for today at 32.52. Lastly will be the West Texas crude oil. So West Texas crude oil managed to gain today due to the Iran-Israel conflict over here, and also broke above the 20-day moving average, and also our tightened short-term pivotal resistance that we have yesterday at the 62.80 level. So with that bullish breakout that's been seen yesterday, and the RSI now trading above the 50 level mark again, and has started to print a series of higher low, we will now potentially see another round of corrective rebound sequence unfolding in the West Texas oil. So with that, I will use a short-term pivotal support level at 61.30, which is also confluence with the 20-day moving average. I think it's a similar support level as well. As long as any dip or drop didn't break below 61.30 short-term pivotal support level, we will flip to a intraday trend bullish bias for a potential corrective rebound sequence to play out again. Above 64.06 exposes 65.40. Above 65.40 may see the next intermediate resistance coming in at 67.35, which is the minor swing high of 4th of April. Only a bearish breakdown with an hourly close below 61.30 that would invalidate today's intraday trend bullish bias to see yesterday move as a head fake, and the bearish pressure may resume on West Texas oil to revisit in short term the next support level at 60.35 followed by 58 figure level. All right, so that's for West Texas oil. Flipping to a intraday trend bullish bias for another round of corrective rebound sequence unfolding using 61.30 as my short-term pivotal support level. All right, so before we go, let's have a quick look at the economic calendar. What are the key data and events to look out for today in today's European session, and as well as the US session thereafter. All right, so today will be Wednesday. All right, so over here in Wednesday at the start of the European session, key data to look out for that may create volatility on the sterling dollar and the sterling crosses will be the inflation data out at 2 p.m. of UK. So UK inflation data market participant will be focusing on the core inflation rate, where there will be a potential 2 basis point increase in April from 3.4% that is being printed in the previous month of March over here. And thereafter, we'll have a rather quiet European session, no other key data to take note of over here. The next up will be the start 1 hour after the start of the US session will be at 10:30 p.m. Singapore time. That will be the weekly EIA crude oil stockpile change that could actually impact the intraday movement of the West Texas crude oil. And thereafter, we do have key European official speaking at 12 a.m. Singapore time. That's Thursday. ECB Lane speaking. Then also by Fed official Barkin. He will be speaking at 12 a.m. as well. Then in tomorrow's early Asia session, we see the release of flash PMI data in Australia, compiled by S&P Global, both the services and the manufacturing. That's 7 a.m. Singapore time. And thereafter, at 8:30 a.m. Singapore time, we have the Japan preliminary services PMI data released as well for both the services and the manufacturing that could influence the Japan 225 and especially the dollar yen, given that the dollar yen is now on a weaker footing, breaking below the 144.10 level. So with that, that sum up today's daily dose of market insights. Kelvin here signing off, and I wish you a great day ahead, and we shall speak again tomorrow. Thank you.